This is Larry Spoth, and thank you for taking the time to allow me to walk you through our business model, explaining how we can create high six-figure or even seven-figure incomes. There are 4 income streams at Symmetry Financial Group. Income stream number 1 is from sales of final expense and mortgage protection insurance. These can either be internally generated leads or external leads, but basically make up life sales and commissions. The second income stream is from annuity sales. We convert final expense and mortgage protection appointments into annuity sales. Full training provided on a private password protected website. The third income stream is from spreads built on your downline agency sales. Automated recruiting has made this formerly challenging aspect of the business easy. Just order a campaign and turn it on. This is unique to my agency only. We own this automated system and it's not available to other agents. The fourth income stream is from the equity bonus on Symmetry Financial Group's overall business volume, and that's attainable at the 110% commission level. So for the agent who wants to both sell and grow a business, below is an example of how you can build towards a high six-figure or even that seven-figure income. So let's look at this overview example. Here's an example of the potential income and the sources where that income came from. Let's say you have reached the 110% commission level on life sales and 7.5% on annuity sales. The SFG agent and team have now hired 53 agents into the organization via our automated recruiting program. Quick note, remember, agents downline is responsible for some of the new agents hired. The team as a whole has hired 53 agents total into this example. So let's take a look at the result, then backtrack and learn how you can get to this point. So the SFG agent had $200,000 in personal annuity sales times 7.5% commission. That's $15,000 to the agent. Let's say the agent also had $10,000 in personal final expense or life sales times 75% of that commission paid up front times the 110% commission level. That's $8,250. Let's say in the organization there were 53 agents and they each sold $10,000 each per month of life insurance. That's $530,000 times a 15% spread to you. There's another $79,000. Let's say those 53 agents were also trained via our training program and they sold $200,000 in annuities per month each for a total of $10,600,000 times 0.5% spread to you. There's another $53,000. But you had lead costs for your production, and let's say the lead cost you had was $1,200 per month, so we'll subtract that off. That was for either life leads or annuity leads. Add to that the equity bonus. The FMO, Symmetry Financial Group, let's say is at $200 million for easy math, times 0.003 divided by 12 months, there's another $50,000 to you. Grand total to the agent at the 110% commission level, who has helped another agency to the 110% commission level, is $204,550 per month. That's around $2,454,600 per year and growing. How is this even possible? Well, we're going to break it down in the following corporate overview and try to detail out in basic examples of how we go from zero to this type of income. Let's get started with how our business works and how we get paid. The first question is, are we a good fit for you, and are you a good fit for us? To answer this question, you first must compare this opportunity to others that may be out there. This video compares Symmetry Financial Group, SFG, to a typical FMO or other competitor in the life insurance, final expense, or annuity space. A few key things to consider and understand as we're going through this. SFG agent will take my agency's online training and learn how to convert life clients or final expense clients into annuity sales. The SFG agent will have access to our privately held website for annuity and Index Universal Life training. You'll learn everything from how to run the software, folder setup, and how to sell the product in the house. Comprehensive training is critical to learn and sell these products. The SFG agent will make normal commissions on life and final expense sales, plus the annuity sale, and climb the commission ladder to 110%. The SFG agent can also buy annuity-specific leads or generate exclusive leads via our private marketing programs, which include both direct mail and TV. The SFG agent can also build a business and create a spread on downline agency sales volume. This creates what we call passive income and is the third income stream. The SFG agent has access to our automated recruiting engine. Never place a recruiting advertisement again. Say goodbye to Craigslist. When the agency owner reaches the 110% commission level and brings one other agent to that same level, an equity bonus based on the parent FMO is paid out each month based on SFG's sales volume. It's like owning part of the parent FMO. Why would you work for a company and not have an opportunity to own part of that company via the equity bonus position? Okay, next let's examine how a commission is made and what a spread is. Let's also learn how your agency's sales volume counts as your own when climbing the commission ladder to 110%. This is the commission grid for life sales. It goes from 60% commission to 65% to 70%, all the way up to 110% commissions, plus the equity bonus. So the agent starts at 60% on life sales and 5.75% on annuity sales, depending on the client's age and the product you've selected. To go from 60% commission to 65% commission, you must submit $7,500 in premium 2 months in a row. We call that AP, or annual premium. Okay, to move from 70% commission level, you and your agents must submit $10,000 in AP, annual premium. If you have downline agents, remember, their sales count as yours and will help push you up the commission ladder to the 110% level. This is very important to understand. Annuity sales count as well for your commission increases. And here's some good news. Insurance companies will pay you 75% of the commission upfront on life sales and the remaining 25% at the end of the first year of your client's policy. Insurance companies will pay you 100% of annuity commissions upfront. You get paid directly from the insurance company. Let's do a basic example of calculating a life sale commission. Let's say the average life sale or final expense sale is $85 a month. So take $85 times 12 months, that's $1,020 AP, annual premium, times 75% paid up front, which equals $765. If you're at the beginning commission level of 60%, then that's $459 direct to you on that sale. Let's say you sold 3 policies per week for a 4-week month. That's $5,508 to you up front. That's at 60% commission level. Other life products like Indexed Universal Life, tax-free retirement plans, etc., tend to collect 3 times the premium. Although it's a little bit more difficult to learn, the training is on our website, but let's keep it simple and not add that into this equation. So we'll just stick to the life and the final expense sales. Annuities, which are a second income stream, are calculated differently. Your commission on an annuity sale is a percent of the amount rolled over to the annuity. Example, you roll over a $200,000 401k to the annuity. 200,000 times 5.75% beginning commission level equals 11,500 to you directly from the insurance company. Add the annuity commission of 11,500 to your life sales commission of 5,508 for a total of $17,008, and my friend, you are in good shape. Our private training platform will teach you how to capture the annuity sales and convert life sales to the annuity sale. Let's take a minute and learn about the third income stream, which we call a spread on downline business, or what I like to call passive income. I call it passive income because we did not go out and make the sale personally. You might be on vacation and your agent made a sale. If you have a spread, then you made money on that sale. This is normal agency hierarchy in the financial services business. So let's say you have 3 agents at the 60% commission level. Let's also say your current commission level is 75%. So take your level of 75% minus their level of 60%. That gives you a 15% spread or difference on anything that they write. Here's a simple example. You have 3 agents at 60% level and they each write $10,000 in AP, totaling $30,000. You have a 15% spread on those sales. So $30,000 times 15% spread equals $4,500, and you get paid 75% of that up front for a total of $3,375 to you. We call that passive income because you didn't write the business. Your agents wrote it. In the annuity example of a $200,000 rollover, if you had a 0.5% spread, you would have been paid $1,000. Again, we call that passive income from your agency. If each of those agents wrote $200,000, you would have an override of $3,000, right? $200,000 times 3 agents equals $600,000 total in annuity business, times 0.5% spread equals $3,000 to you. That covers our commission schedule and how basic commissions are calculated along with agency spreads. Let's talk briefly about agency building before we break down the numbers, which we will get to in just a minute. Building a sustainable business on your own would be a monumental undertaking. Everyone wants to own an FMO or huge agency, but few have the resources and sales volume to qualify. I prefer to build my FMO or agency inside the parent company or FMO, as we call them. I prefer to let them do the heavy lifting and take the risk. Our system, training, structure, back office, marketing support, etc. are already up and running smoothly. Symmetry Financial Group is recognized as the fastest growing business of its kind and is listed in the Inc. 5000. This is not new. How we approach it and grow it is cutting edge. The platform and systems are in place. All you have to do is plug in. Think of it as a franchise with no franchise fee. Just open your doors and start making money. Now this sounds easy, although if you've never built a business or recruited for a business, it can be a daunting task. Here's more good news specific to our agency only. The team at Retirement Protection Solutions have automated the recruiting system. Gone are the days of posting advertisements all over Craigslist or ZipRecruiter and getting kicked off or moved to the 10th page within the first hour of a post. In our automated system, you simply order a campaign. We post it and basically turn it on. We follow up and email all your potential recruits. Your job is to do the phone interview following our script and onboarding process. We even provide back office support to get your agent contracted and appointed to insurance companies. We don't charge for that. We literally are working on your behalf. Your job will be to plug the new agent into your system and help mentor that agent to success. It's your business, so we expect you to work with your new agents. We're here for support and we'd love to jump in and help, although this is not free money. It's a business and we all work it as a team. Fast, efficient, no guesswork, no ads to post. The system is in place. Just follow the step-by-step instructions. Our goal is your success. We want you to reach 110 fast and bring multiple agencies along with you. Once you reach the 110% level and bring one agency with you to that level, you qualify for the equity bonus. That's the 4th income stream. You essentially take an equity position in the master FMO Symmetry Financial Group. With this basic information, let's look at the numbers and determine if you're a good fit for our company and if we're a good fit for your goals. As I mentioned previously, we want to compare this business model to the typical insurance sales company out there. Let's see if there's a significant advantage to working with us or not. Let's go ahead and break down the numbers. SFG commission grid for life insurance is on the top line, and annuity commission grid is on the bottom line. That varies by state, product, or client's age, of course. So the starting agent at Symmetry comes in at 60% commission level for life sales and 5.75% on annuity sales. For comparison, we're going to type the competitor FMO in red and the SFG agent in green. And let's say the competitor starts their agents at 85% commission level instead to try to draw people into their organization. Okay, so at the competitor, let's say that agent sold $10,000 in personal final expense or mortgage protection life insurance sales times 85% at competitor FMO, and of course they pay 75% up front as well. So that agent made $6,375. The lead cost for those leads, we're going to stay consistent at $1,200, so subtract that out of their profits. Net to the agent at the competitor FMO, $5,175. Not bad. At Symmetry, you've taken my training for annuity sales, IUL sales, etc., and so now you know how to find the money and convert life sales or prospects into annuity sales as well. So the SFG agent writes $200,000 in annuity business, let's say, times 5.75% commission. That's $11,500 total to the agent direct from the insurance company. And that agent, while in the field, also wrote $10,000 in personal final expense or life sales times 75% paid up front, and at a 60% commission level, that pays out $4,500 to the agent. The lead cost, let's say, is the same, $1,200, so net to the SFG agent, $14,800 for the month. What's better for the agent? $5,175 at the competitor or $14,008 at SFG with ownership? SFG allows and encourages the hiring of downline agents to build an agency and eventually take an equity bonus position in the FMO. Use our automated system to build your agency. Downline agent sales create a spread for agency builders, and that becomes passive or override income for the agency owner at Symmetry Financial Group. Remember, your agent sales volume also counts as yours and pushes you up the commission ladder. So all those sales cumulative push you up the commission ladder. Here's an example, and let's say you've climbed the commission ladder to the 75% level on life sales, which pays 6.0% on annuity sales. Quick note, the following examples will assume the primary agent writes $10,000 in final expense or life sales and $200,000 in annuities from converting those leads or annuity specific leads, and his downline agents do the same. For the sake of easy math, we'll assume the same for all downline agents. So the competitor agent sold $10,000 in personal final expense or mortgage protection life sales times 85% and 75% paid up front for $6,375. Lead cost for his leads, $1,200. Net to agent at competitor FMO, $5,175. Again, not bad. The Symmetry agent has $200,000 in personal annuity sales times 6% commission level because he took my training and learned how to convert. That's a net $12,000 to the agent. And that agent also sold the same $10,000 in final expense or mortgage protection life sales times 75% up front times 75% commission level. There's another $5,625 to the agent. Now we're going to say the Symmetry agent has brought in 3 new agents, and each of those 3 agents, through our training, learned how to write life and annuity business. So we're going to say they each wrote $10,000 in final expense sales, totaling 30. Right? 3 agents times 10,000 is 30. And you have a 15% spread on that business. So the business they wrote, 30,000 times 15% times 75% of that paid up front, there's another 3,375 net to you, the agency builder. Your 3 agents also wrote 200,000 each for a total of 600,000 in annuities times 0.25% spread. There's another 1,500 to you, And of course, you had your personal lead cost of $1,200, so subtract that out, net to the Symmetry agent that's taken my training, $21,300. What's better for the agent? $5,175 at the competitor, or $21,300 with ownership? Let's jump up to the 85% commission level on life sales, which pays the agent 6.25% on annuity sales. In this example, the agent has now hired 7 agents in below him, and their sales volume plus his cumulative has bumped him up to the 85% commission level. So the competitor, FMO, that agent is still stuck writing just basic life sales, and he makes his same $5,175. Meanwhile, the Symmetry agent that's taken all the training, has used the automated recruiting engine, etc., and that agent writes $200,000 in annuity business times 6.25%, that's $12,005 to the agent. He also wrote the $10,000 final expense personal sales or mortgage protection times 75% up front at the 85% commission level, pays the agent $6,375. Remember, he hired those 7 agents, and we're going to say each of those agents also wrote $10,000 in final expense or life sales. So that's 7 agents times 10,000. That's a total of $70,000 in sales there, times 75% paid up front, times the agent's 15% spread on those sales. There's another $7,875 to the agent. Those 7 agents also took the annuity training and wrote $200,000 each in annuities for a total of $1.4 million times 0.5 spread to you. There's another $7,000 for the Symmetry agent, less the Symmetry agent's lead cost, net to the Symmetry agent $32,550. Again, what's better for the agent? $5,175 at the competitor, or $32,550 with ownership? Let's jump up to the 100% commission level on life sales, which pays 6.75% on annuity sales. The SFG agent and agency have hired 23 agents, and this qualifies him for a commission level increase. And that increase is based on his personal production as well as his overall agency's production cumulative, which pushes him up to the 100% commission level. The competitor FMO has that sales agent still stuck at the 85% commission level, plus or minus, and he still makes his normal $5,175. Meanwhile, the SFG agent that took advantage of our automated recruiting engine and the annuity training website and IULs, etc., well, that agent went out and sold $200,000 in annuity business times 6.75%. That's $13,500. He sold $10,000 in final expense, let's say, or life sales. At 100% commission level, that's $7,500. Remember, he hired 23 agents, and let's say each of those agents sells $10,000 in life sales for a total of $230,000. And let's say you still have a 15% spread on that business. That spread can vary depending on where those agents are in the hierarchy and where they are on the commission ladder. But at a 15% spread to you, that's another $34,500. And let's say each of those 23 agents sell $200,000 in annuities for a total of $4.6 million times 0.5% spread to you. There's another $23,000 to you, less your lead cost. You've netted at SFG, in this example, $77,300. Now, what's better for the agent? $5,175 at the competitor, or maybe a little more if he's at a higher commission level, or $77,300 at Symmetry with ownership? Which is better? Hopefully, you're seeing how to leverage an agency and how to create passive income for long-term wealth creation. Okay, let's continue with this example. Understand this. It's the combination of our online training platform plus the automated recruiting system that makes this possible. Without training, I'm certain the annuity sales would not be there. Without the automated recruiting system, I'm certain most agents don't want to spend all day on Craigslist or ZipRecruiter and would fail. Training and smart automation is the key. Let's jump up to the 110% commission level on life sales, which pays the agent 7.5% on annuity sales. The SFG agent and team have now hired 53 agents, and the agent gets an increase in commission level, which again is based on his personal sales volume plus the overall sales volume of the agency. So now he's at the 110% commission level. The competitor FMO is maybe stuck at 3% commissions on annuities, which is typical, and maybe he's even at 85% or 100% on life sales. But he has no real ownership or spread on downline agents and no real annuity or advanced markets training. And this is key. So we're going to say the competitor agent is still stuck at making $5,175. Meanwhile, the SFG agent wrote personal business of $200,000 in annuity sales times 7.5%, that's $15,000 to the SFG agent. Plus he wrote $10,000 in personal final expense or life sales, 75% up front at the 110% commission level. There's another $8,250 to the SFG agent. Now he's got 53 agents in the organization, and for easy math, let's say they each sell $10,000 that month for $530,000, right? 53 agents times 10,000 is $530,000 in business volume. And let's say your spread is still 15%, and that can vary, but that would give you $79,000 direct to you, the SFG agent. And let's say those 53 agents sell $200,000 each in annuities for a total of $10.6 million times 0.5 spread to you. There's $53,000 to the SFG agent, plus or minus as spreads can vary. You went out and bought your usual leads for $1,200, so net to the SFG agent that month, $154,550. What's better, $5,175 or $154,550? If the parent FMO is at $200 million a year, let's say, times 0.003, this is the equity bonus now, divided by 12 months, there's another $50,000 on top of that agent's agency production direct to that agent. That's a grand total for that agent at 110% level who has helped another agency to the 110% level. That's $204,550 of income. That is around $2,454,600 per year and growing. Again, what's better for the agent? Being a sales guy at some competitor and earning $5,000 a month, or $204,550 per month with ownership? Now we know an agency will never grow linear like the above example. It won't happen. Some agents will produce more in annuities and some will produce much less. Some agents will rely on annuity leads and some will rely on final expense or mortgage protection leads, or a combination of the both. The point is this: why work for a company that doesn't give you ownership? Why get stuck in a rut where you personally must produce every month for the rest of your life? Why work for a company with only one income stream? Why not build an agency and enjoy the passive income and eventually leave the field and not have to sell anymore because the passive income is now in place? The important thing to consider is not who has the highest commission at the entry level. Rather, what company gives you the best opportunity over time? The answer is clear. Our business model is based on a duplicatable format that any agent can plug into. Our training on both products and how to build a business is second to none. Our goal is your success. Along this journey, you will not be alone. Although we have online resources for training and support, you will also be mentored by an agency manager who has reached their high levels of success using the exact same methods and practices they teach you. You will have multiple opportunities during the year to attend conferences and classroom sessions designed to help grow your business. You will hear each week via conference calls from experts on topics such as how to get your business issued and paid, overcoming objections in the sales process, maximizing all 4 income streams, how to structure retirement plans, and much more. Symmetry Financial Group offers top commissions, the best product line and carriers available. We also offer a lead system that puts you in front of buyers. Your training on indexed universal life and indexed annuities will help you maximize every sales opportunity with the goal of helping each family with their goals. Retirement Protection Solutions has created a password-protected site that will train you on all the intricacies of indexed universal life and tax-free income plans. The site will also train you via video on annuities and the sales process from front to end. Our training is step-by-step and in logical order from A to Z. After years in the industry, we know it's a combination of training on all products and access to leads that will get you in front of buyers along with an ownership opportunity, and that's what matters. So what now? Go to the Apply Here tab above and apply via the site, and we'll call you to schedule a time to answer your questions. Or call the agent that sent you this video and let's talk about this opportunity. Certainly, this is not a perfect fit for everyone, and we are looking for the right people as well. Make contact with us via the Apply Here tab above or call the agent that sent you this video. I hope you found value in this video. Thank you and have a great week.